most instructors I know, not all, but most instructors I know are okay, but there's very few that I've met that are consistently profitable over and over and over and over again. And the reason I don't mind putting my live trade, my live confirmation slips, in my live account, this is my live account you're looking at all day today. The trade stuff over here on the screen here. Because I make money, I'm very good at it. Not to my own horn, but I don't know very many people just the opposite. And when I find people that I like to learn from, because whatever they do, if they're really successful, is almost always different than what I do. And I want to learn as much as I can. But I don't want to learn from somebody who's not very good. That's education. I get the education for free off the internet. Why do I want to pay you for that? Right? Well, free stuff, I have to go for it. All right, so most professionals learn to adapt. Most instructors teach this. Big difference. The difference is because most professionals learn to adapt. There's not very many professionals that are truly professionals that are consistently profitable. What would happen if you're wrong multiple times in a row? What if you're trying to adapt and you just keep making bigger mistakes and bigger mistakes and bigger mistakes?
Take a breather.
Yeah. That's why you teach this instead. Because at least you stop your losses. So that's why when we think of stop loss, we think of just closing the trade. When I think of stop loss, I say, how do I stop the losses so I can make even more money now? Or at least break even. That's where that's out there. So that's what we use instead. So I want you to start kind of thinking of the word stop loss as where do I stop my losses by learning to adjust? How can I adjust to make money? And if I do adjust, what will then happen if it goes up, down, or sideways? And if it does go up, down, or sideways, what will I do as an individual? That's what I want you to start to learn. Okay, we look for trade. Let's look at some of the technical analysis I use, and we'll cover some covered call trades. I'm going to show you what to do if covered calls go against you and how to still make money on covered call trades. So this is when I talk about technical analysis, it's like Tim said. When Tim was up here earlier today, he said he keeps his charts very what? Too much clutter on there, and you start looking at too many different things. You will always be able to find something that will talk you out of a trade. Always. Always find something. You can give me any stock that you want and tell me how much you like it, and I'll find something that's bad against it. And probably because of who I am, I will talk you out of the trade, which shouldn't happen because I'm talking out of the trade because it doesn't fit my style. It might completely fit your style. So keep it simple as possible. Don't overanalyze. It's too easy to overanalyze trade and say, well, what about this? Yeah, I see that too. But think about how you trade and make the trade fit your style. It's not technical analysis that makes you successful. Wow. Technical analysis helps you find your trade. Technical analysis tells you what type of trade you're going to do. Technical analysis explains, hey, how long should I be in it for? It doesn't make you successful. Stock is in an uptrend. If I look at technical analysis, hey, that stock's in an uptrend, my MACDs and stochastics are just bouncing, that tells me I should look more as a bullish trade versus a bearish trade. What if I buy a call option that's way out of the money? Technical analysis didn't make me successful. It just said that's a bullish trade. What makes you successful? Making money. Managing the trade. What makes us successful? What makes us successful? What did I want you to write down? I will learn.
Manage the trade.
I will learn how to manage the trade. Well, I forgot what the statement was already.
I will understand my trade.
That's it. I will understand my trade before I enter.
I will adjust if necessary.
I will adjust. That's what makes you successful. Not the technical analysis. Technical analysis, I would never trade without technical analysis. But all it does is tell me if I want to be bullish or bearish, how long or short term I should be in a trade. It's how I manage the trade that makes me successful. Because everything will look perfect when you enter it. It might look perfect a half hour later. It just changes. There's no perfect chart. There are, however, some basic concepts that you can follow. And when I talk about technical analysis, I keep it as simple as possible. First thing I always look at, what's my trend? Up, down, or sideways? Where's support and resistance? This is the most important. If you took everything else out and only gave me two things, trend, support, resistance is what I would use. If you took everything and said, Mike, you can only have two things. Give me the trend, give me support and resistance. And I can see support and resistance if you just give me a basic chart. We should all be able to see those. Goes up, stops, that's the ceiling, that's resistance. Drops, bounces, that becomes support. More often it hits it, stronger it becomes. I'll look at price patterns, formations, and candlesticks. I'll look at those. They're not primary, but I'll look at them. And if I see an ascending triangle, getting stronger, what's going to happen? Eventually, what's going to happen? I'll look at those. I like those. I'll look at some price formations. I'll look at some candlesticks. But really all I'm after are the ones that show me potential breaks or reversals. I don't really want a continuation pattern. That just is an uptrend. Something like continuation pattern is an uptrend. All I really focus on are breaks and reversals. Breaks and reversals. Because that tells me something different is going to happen, and I need to make sure I build into my trade. So
Contrary.
kind of contrary a little bit, yeah. So what would be a reversal pattern as an example?
Doji.
Head, shoulders. Okay. How about a double top when it starts to drop from the ceiling on a volume spike?
Full flag.
So continuate or reversal patterns. Most of you have taken the advanced technicals course in the vessels. I wrote the course, so I'll go back and read that. I'm just after reversal patterns. Things that just tell me it's not going to do what it normally did. That's what I want to know. If you're brand new to those, just go onto the internet and type up reversal patterns, stock market reversal patterns. Those are the ones you want. Continuation pattern just means it's going to do what you thought it was going to do anyway. I'm not concerned about. How about some type of candlestick that tells me something else is happening that I should be aware of? What would be some type of candlestick that says, hey, something's in an uptrend, but you see a candlestick that says, that's probably the top.
Abandoned baby.
Shooting star. What's a shooting star?
With a doji with a long
With
tail.
long
Okay.
tail at the top.
Body
Yeah, short
Body
body,
with
long
a,
tail.
with a tail sticking above it. Looks like a shooting star, right? Body with a tail sticking above it. Stocks in an uptrend, and you see one of those.
Run.
Here's what it's telling you. Stocks in an uptrend moving higher. Next day it opens higher, and it rallies, 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 rallies. So before the end of the day, the buyers couldn't hold on, and the sellers said enough is enough, and the sellers forced it right back down again, which means the buyers have now lost control, and the sellers have come into it. So what's going to happen at that point of time is the buyers say, hey, it's already been a nice uptrend. I've already got a decent profit. Failed to make any new highs through here. The sellers finally jumped in, started short selling the stock, pushing it down. I better do what if I had profit already?
Lock
Lock in my profits. How do I lock in my profits? I do that by So if I start selling, and everybody else who had previously bought starts selling, and the short sellers start selling, and it's better chance it's going which direction?
down.
Those are the type of patterns I want. They're called reversal patterns. So go on the internet, type of reversal patterns. If you have your Investos AT class, go back and look for reversal patterns. The candlesticks, they're in there as well. So go back and look for those. All right. I'm after some of those. Oscillators, I used to, MACDs and stochastics. Why? Because everybody else does. They're very popular. Are they the only ones? Absolutely not. There's a lot of different oscillators. And an oscillator only tells you a stock is currently overbought or oversold. All it tells you. It doesn't mean it'll continue to be overbought or continue to be oversold or even go up or down. It should say it's currently overbought or oversold. If my MACDs and stochastics are high, better chance my stock has is it's already had a nice bounce. Probably, not necessarily, but probably the next move is down. So if it's already overbought, I don't look for any more bullish trades. If it's already dropped and it's low and it's oversold, down towards the bottom of this little graph, I'm probably going to start looking more for a bullish trade because it's already made a move. So I just look for two. Why two? One to confirm the other one because they don't always move the same direction. Volume, increase or decrease is above average. So when I'm looking at volume, all I'm really looking at is the current or the last few days more or less than average. More means, hey, it's better chance to have a strong directional move. So oscillators tell me if it's overbought or oversold. Volume tells me if it has the ability to change. If something's going up and hits the ceiling, it's going to come back down. It goes back down. If it comes up and as it's moving towards the ceiling and volume is increasing and it breaks out on a volume spike, that has the ability to actually continue higher. So I'm going to look at volume and news and fundamentals. I'm not real big on both of them. I like them. I always look at fundamentals. Basically, I look at fundamentals for the simple reason that if a stock has really good fundamentals to it, most of the news that comes out will probably be geared towards what? How's that? If you've got a straight A student or a child, you have a child and your child's a straight A student, you know that anytime your child comes home with a note from the teacher, it's probably pretty good news. You've got a good student. Your child's always getting in trouble, always getting put on detention, getting kicked out of school, got straight F's. The next time your child comes home with a note, it's probably bad news. So if I'm going to look for a bullish trade, I'd like to find a stock that has more of a history of more positive news than bad news. That's how fundamentals play for me. I don't usually say, oh, you know, long term it's got a low PE ratio and this and this and this. Stock market's going to do whatever it's going to do, based on whatever you think the fundamentals are. And it does whatever it wants to do based on the news. So if most of the news is positive, because most of the fundamentals are positive, it has a better chance of going the direction I want it to go. That's how I use the fundamentals. You can use them however you want.